my name is Ben Reppond. Welcome to my YouTube channel. Today is August 20th, 2025. Okay, we're going to cover the market, and I'm going to begin with the dashboards. So these are the first one are the four major U.S. indexes, two foreign, and then long-term government bonds. So really a good picture internationally of what's going on in the markets. In the U.S., Dow, S&P, NASDAQ 100, and Russell 2000 Small Cap Index. And then foreign markets are developed markets, EFA, and the undeveloped markets, EEM. So this is a real quick snapshot of, in the yellow box last week, in the pink box year to date. And then the very far right are the green or red dots, and the green dots show that those ETFs are above their 20-day moving average or below it, green dot, red dot. And so really in just a real quick snapshot, you get a really good picture of what's going on in the U.S. and around the world. Looking at last week, everything was green in equities, all six, and then slightly negative long-term government bonds. Year to date, all six are positive, going from 21% in the developed markets down to 2.8% in the Russell 2000 Small Cap Index, and then slightly negative in the long-term government bonds. This takes the S&P 500, breaks it apart into its 11 component parts, 11 sectors, and ranks them from top to bottom, and in the pink box, the one just to the right. Year to date, going from 14% return year to date all the way down to negative. The last two, energy and healthcare, are slightly negative. So really another good picture. The yellow box shows those same indexes. Not, of course, the ranking is done from the pink box, but the yellow box shows really what they did last week. Again, some mostly positive and a few are negative. And then to the far right, again, above or below the moving average, 20, 50, 100, 200-day moving average. There were 36 out of 44 that were positive this week, compared to 28 last week. This is a chart of the S&P 500 for the last 3 years. You can see it really goes from kind of bottom left to upper right. Black arrow kind of tells the story. There's some moves above and below that, but by and large, moving in an upward direction. And where it is today, you can see at the very end, upper right, the gap between the S&P 500 SPY and the moving average underneath it. That gap is the degree to which it is above its 20-period moving average. Same chart, except I put it in a candlestick chart, and some people like to see it that way. And then this same chart, except what I did was compress it. I took just this year instead of 3 years. So it's from year to date, from January 1 to present. And this is a daily chart, not a weekly chart. So any one of the candlesticks, whether positive or negative, is that particular day. And again, no surprise, it's moved up just in this short period of time from early April up to present in a pretty sharp and pretty consistent manner, still going up actually. The NASDAQ 100 in a ratio above the S&P 500. Numerator, NASDAQ, denominator, S&P. Developing, therefore, a ratio, relative performance, and when it goes up, it favors NASDAQ 100, and when it goes down, it favors S&P 500. So in that period of time, this is a 3-year chart, so from January of 23 to present, that's about 2.5 years, it's clearly had an upward rise, but particularly from the bottom at the end of December 2022 to present, that early move was where most of that occurred. During the last couple of years, it's from a relative strength standpoint kind of gone sideways, favoring NASDAQ and then favoring S&P. Same thing, relative strength showing growth, a growth ETF SPY-G compared to a value index SPY-V as a denominator, showing relative strength and a lot of volatility up and down. When it goes down, it's favoring value type stocks. When it goes up, it's favoring growth type stocks. And it's clearly been, most of that time, been favoring growth type stocks. The S&P 500 SPY, relative strength to IWM, which is the Russell 2000 Small Cap Index. Same thing, going in an upward direction from lower left to upper right. And when it goes down, it's favoring small cap. When it goes up, it's favoring large cap. At the very end of it, upper right, you can see that little tick down, and that is last week. And last week, the Russell 2000 did better than the S&P 500. But in general, it's been favoring S&P, which is large cap. Long-term government bond, 5.5 years, the direction down. Now that's the value of that ETF, TLT. We could use the ETFs, IEF or SHY. We could use those, and intermediate term, short term, and same thing. It's just a matter of magnitude. And so this shows that interest rates, or the perception that interest rates are going up and bond yields accordingly, are impacting the price of bonds being pushed down. They move in an inverse relationship. Then I take the TLT, the same ETF, and this is on a weekly basis, and compress it and look at it since September of this past year. So that puts us about 11 months out. I put a black arrow to show that even in this period of time, it's gone up and down, plenty of both, but there is a downward direction going from early April to present. The dollar, US dollar, has been going up, but since January 1 of this year, it has been going down. And our currency is the reserve currency of the world, and other currencies are valued relative to ours. So what this means is that in any foreign country, if their currency is stronger than ours, then they do better. The value of what goods and services in the U.S. is more attractive to them than it is for us to buy goods and services in their country. And since January 1, you can clearly see the dollar has been moving in a downward direction. Gold, consistently over this 3-year period of time, has been going up. There are periods here where it does go down for a short time, but look at the degree to which it has stayed above its 20-period moving average most of that time. So, and it's still above, slightly above the 20-period moving average. Silver has shown more strength than gold lately, still moving in the same upward direction, but it has been more volatile. It moves up and down more than gold does, but currently more above its moving average than gold is. Bitcoin, same thing, moving upward direction and above its 20-period moving average. Volatility, now volatility, there's an index called the VIX, V-I-X. It's a volatility index. And when it goes up, that shows higher volatility in the market. Usually it means the S&P 500 is going down. and vice versa. So this has been coming down. I'd put a black arrow you can see since early April, moving in a downward direction, and that's showing that equities are probably rising, which they are. The S&P 500, use SPY as my ETF, compared to EWY, which is the ETF for Korea, South Korea, and this shows that that black arrow at the very far right, south, is the degree to which South Korea is outperforming the U.S. market, beginning in about around January 1. Prior to that time, the U.S. was stronger, and now it's South Korea. There's many other markets that I could show you. They all kind of show generally that the U.S. market is weaker than most of the foreign markets. Gold and silver. Gold is $3,336 an ounce for pure silver, or for pure gold, as of last Friday. That does not include the retail markup, but just the spot price, which is without retail markup, is $3,336, down 1.9% from the previous Friday. And silver is $38.41, down 1% from the previous Friday. The gold-silver ratio is 87 to 1, and that makes silver, in the eyes of many people, a better buy. A monster box, 500 rounds or ounces of silver, generic silver, and it's just generic, and is $19,120. Some people buy it in smaller quantities, but some people prefer to buy it in boxes. This includes a 23-cent per ounce markup, and that makes the price per round $38.24. So it's very attractive right now to buy silver because the markup is so low. But the spot price has continued to rise. Now, if you buy gold eagles or silver eagles, there's a premium for those, and some people prefer those over generic, and each person gets to decide kind of how they want to do that. I recommend having some silver or gold. My preference is silver, and as a backup, an alternative to the U.S. dollar, paper currency, gives you something of intrinsic value, whereas paper currency, I hope it holds its value over time, but if it doesn't, gold and silver have a 4,000 plus year track record of holding their value. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.